We do want to welcome you to our 10 Talents Foundation Year-End Giving Strategies webinar. My name is Dan Kimball. I am the operating officer for 10 Talents, and we are so glad that you took the time out of your busy schedules to join us. I know that we had some folks that registered that represent both the financial services world, some people that do financial planning, some of our financial advisors, and we also have some nonprofits who have signed up. So whichever hat you wear, we do want to welcome you. Just want to take a minute and tell you a little bit more about the 10 Talents Foundation. We are located in the Central Valley in Fresno. Our why, our purpose in life, and what we do is to inspire people in Central California to become greater stewards of their time, talent, and treasure. And how we do that is we provide Christian families, individuals, and nonprofits with a charitable platform to leverage resources for greater impact. And really what we're all about is generosity. We love the word generosity. And what we want to do is help people become more generous and leverage their thoughts and ideas of generosity through utilizing a foundation. So if you want more information about us, we can certainly we'll drive you to our website afterwards. But we do welcome you, and we are recording this webinar, so you'll get a copy of this at the very end. So before I go any further, I do want to welcome on with us is a good friend of mine and a great mind in this world is Corey Bell, who's a CPA and represents Moore Grider CPA firm. So welcome, Corey.
Yeah, thanks so much. Good to meet you here.
Yeah, and Corey is actually going to join us here in a little bit in the webinar, and he's going to also offer some additional thoughts and resources. Corey's, of course, dealt on the CPA side. He's dealt with a lot of individuals and businesses about how to leverage their tax situations, but also how to be more generous in the process. So what we want to think about when we talk about this is not just how do we get a best tax advantage, which is important, but how do we become more generous? So as you can see on the screen, hopefully your video and microphone is turned off. Use the chat button, as you can see right there, if you have any technical difficulties. We do have a couple folks from 10 Talents that are also listening in, and you can use the question and answer box to submit any questions during the webinar, and then we will specifically have a time at the end to do some Q&A at the very end of our presentation. And as I've already mentioned, this webinar is being recorded, and we'll make this available on our website. We'll send you guys a follow-up email as well and let you know that that's available. So again, we really are thankful that you are with us and that you took time out of your busy schedules to be a part of this webinar. And I hope there's a few things that you can take away from, again, regardless of if you are in the financial planning world or if you're a nonprofit. So again, my name is Dan Kimball. I already introduced Corey. So told you a little bit about our foundation. Again, encourage you to hit our website at 10talentsfoundation.org if you want more information. But we really are driven to help talk to people and have conversations about generosity, specifically in the asset-based world and larger types of donations through those assets. So just want to also it's helpful to let people know that we are not a legal or tax professionals. While even though I do have Corey with us as a more of the professional side, I just want to remind you to please always get advice from your own financial advisor, accountant, etc. These are just tools that we like to talk about. Of course, now that we have Corey on board, if you need a CPA, I would encourage you to go to him because he's a great CPA. Why being thoughtful and strategic with year-end giving will make a greater impact. And of course, part of the reason why we wanted to do this webinar at this specific time of the year is that we are starting on Friday. As November 1st rolls around, you're going to start seeing that time of the year where that drive for year-end giving starts to really ramp up. And we know that year-end giving is an important and impactful time of year. One, because more and more nonprofits leverage November, December, and talk about giving at that time of year. But statistically, it's actually a pretty amazing thing that 30% of annual giving happens in December. That means that for a lot of nonprofits, they're really reliant on this time of year. Many organizations, nonprofits, churches, ministries do their year-end giving at the very end of the year, meaning they do their annual appeals, they do large fundraising drives, and it does tend to kind of feel and it is marketed as a generosity season. People get into that holiday and Christmas spirit, which increases giving habits and people's overall tendency to want to give more. They become more aware in these months. So it is a really important time, both as a nonprofit, but also for individuals who are starting to think about that year end. And just again, another really interesting statistic is 10% of all giving happens in the last 3 days of the year. So what a lot of times happens is that people kind of suddenly start making a rush. And from a tax perspective, people suddenly realize, oh, this would be the time I need to kind of make that final gift if I want to get credit on that year's taxes. Because as we all know, anything after the last day of the month, the last month of the year, you can't claim that on the taxes for that current year. So people are kind of rushing and all of that. Now, what's going to be a little unique about this webinar, if you logged on thinking you're looking for strategies about your annual giving appeals, we're really going to kind of more talk about larger asset-based gifts at the end of the year and how you can leverage year-end giving for some of your either clients, if you're in the financial services industry, or if you are a nonprofit, you can really leverage this time of year for some of your donors. So some of the reasons why people make those year-end gifts, of course, tax benefits is something we all like to talk about. They get those tax deductions. This is also a time that people can make contributions to their donor advised funds. And if you're not familiar with that term or what a donor advised fund is, we're actually going to spend some time on that here in a few minutes. And of course, even greater than the tax benefits is impacting causes that people care about. And that's really what we want to do at 10 Talents is we're not just trying to promote the tax benefits of giving. While that's there, we really want people to start to really lift up and become more personalized in how they give and what they give to. And they're not just giving just for a tax reason, but you're really starting to invest at a deeper level with those organizations and causes and ministries that you might care about. So this is why when you're communicating, if you are a nonprofit, if you're doing end of the year communications, some of these tools that we're talking about today can actually, be useful for you as you start to get to know some of the donors. If you are a financial in the financial services, of course, people that you're dealing with clients all the time, and maybe they're coming to you saying, "Gosh, I might be in a situation where because of my particular financial investments or a movement or a cause in their circumstance might cause them to be concerned about taxes coming up," you can use some of these tools as well. So making a greater big impact is a really important messaging. So as you're talking with folks about year-end giving, we really want to encourage you to really talk about how you make a greater impact. So if giving already is a part of your current financial planning, want to give you a few extra tools to help you be more intentional and strategically maximize those tax benefits as you go. So that's what we're about. And so let's talk about a few things. Some of you might already know this, or have seen in the 10 Talents materials that we do talk a lot about donor advised funds. I actually did a webinar a while back specifically on donor advised funds, but some of you are new to 10 Talents, and so we want to spend a few some time here talking about the donor advised funds, what they are, how they work, and how you can leverage these, how you can learn more about them, how you can encourage some of your donors or some of your clients to really take advantage of donor advised funds. They are really quite a useful tool. They're growing, and yet so many people still don't know about them. So let's just start with the basic. What is a donor advised fund? It's basically like a charitable investment account with tax benefits. So think of it as like a charitable checking or savings account. They are very, very widely used. They're growing in popularity. All of your financial service industry is like Fidelity, Charles Schwab, all of them out there, they have some form of a donor advised fund. Most or all of your community foundations also will support a donor advised fund. As you can see on this slide, over $85 billion was given through donor advised funds throughout the United States. In 2022, we also call those DAFs. So if I refer to a DAF or a DAF, just know that we're talking about a donor advised fund. So that's kind of what they are. So we're going to tell you a little bit how they work. So basically what people have the opportunity to do is they have the opportunity to make a large donation at a certain time of the year. Some do it at the end of the year. Some do it at one point during the year. Now, I do want to mention that every foundation has their own requirements of a minimum donation to open a DAF. But we'll mention that here at the end. But typically what people will do is to start a fund, they'll add funds to their donor advised fund. And then from there, that money sits in an account and it's invested. So it grows while it sits. And you as the donor, then you tell the foundation or financial services industry who has that donor advised fund, which nonprofit you'd like to receive those funds. Then the foundation does the work. This is what's really attractive for a lot of people. Instead of writing 10 or 12 checks to charities at various times, you can actually do that all through your donor advised fund. And then the host of that DAF, in the case of say like 10 Talents, we would then distribute. You would let us know, hey, I want my money to go to my church. I want it to go to the local mission, and then 2 or 3 other nonprofits. And then we write the checks, send a letter on your behalf, and then you don't get inundated with tax letters at the end of the year that you have to make a big folder for to take to your CPA. And so that because you're actually getting that tax write-off when you make that initial donation into your fund. So to start it, you make a donation, and then of course you can then give into that fund anytime throughout the year that you want to receive that tax benefit. So some benefits of the DAF or the donor advised fund is the federal income tax deduction is there up to 60% of your adjusted gross income. And then you can also give non-cash assets, which is what we're going to talk about in the second half of this webinar. It's actually more cost effective than private foundations. So again, if you know of donors, or if you are in the financial services industries and any of your clients are asking you about starting a foundation, it can cost thousands and thousands of dollars. It's very time consuming to actually start your own family foundation. You of course have to manage it. You have to have a board. There's a lot of paperwork. You have to file taxes. So in place of that, what a business or a family can do is they can actually start a DAF through a foundation like 10 Talents. And you don't have to do all that paperwork. So you're just simply just putting money into it and letting the foundation know where you want your money to go. So it really simplifies your giving. And this is probably the last couple points that people really like the most is how it can really simplify your giving through one tax receipt letter. In other words, if you throughout the year say you have a donor advised fund, and let's just say you give to 15 organizations throughout the year, you're not going to get 15 tax receipt letters and then all the other stuff that comes to you in the mail, unless you really like that. But most people want to look for an easier way. And then you can really involve your family. There are situations that I know of with people that I deal with, including some people in my own family, where what they like to do is they like their family to be involved in their giving, but they don't always know what they want to give to right away. So by having their DAF, it allows them to have more strategic discussions and they don't feel rushed, like they have to get the check out right away. So there's really some quite significant benefits to the DAF, to the Donor Advised Fund, and they're really a lot of fun if you think about it, because you are really increasing your generosity as well as getting more people involved. So one of the other attractive things about the DF is the idea is that you can give now, distribute later. So in some cases, people feel like they want to give, but they don't always know what they want to give to at the end of the year. Maybe you're getting overwhelmed by the many needs, and you think, "Gosh, I just don't know uh, which homeless organization or which food bank organization is a best fit for me." Maybe you want it something that aligns a little closer to your own line of faith or your own feeling about how a certain charity works. What you can do is you can make that gift now. Let's just say it's a $10,000 gift to start that DAF or into that DAF, and then it just sits there. It sits there and grows. It's invested safely. And then you can then at any time as a donor, the donors can give out of that fund down the road. They can wait next year or the year after. Sometimes people will make a donation into a donor advised fund just to get it started. And maybe they're just not quite ready to start giving out, so they'll wait a little bit, and that's completely fine. So again, to reiterate that point, you give now, you can distribute later if you want. Some people, are doing that ongoing. So if this idea intrigues you, again, if you're a nonprofit and this is new to you, or if you are, again, a professional in the professional services, how you start a DAF, of course, you need to work with a local foundation. Sorry, I'm going to keep on that slide. You want to work with a local foundation or financial services. Of course, we are 10 Talents Foundation. We are a community foundation, and we're more than happy to have a conversation with your organization or you as a financial services planner about our DAF program. They all come in a little bit shapes and sizes in terms of the minimum amounts to start one. And then some have a variety of different fee structures to manage that fund. They're in the 2 or 3% range, which again, that's just the price of doing any kind of business with an organization. But typically it's going to be an application as an individual or as a business. These can be done by businesses. And just an application of what you want to name the fund. And then often you'll need to also assign a couple of beneficiaries, so that if something was to happen to the donor, do they want that donor advised fund to dissolve, or would they like that to be handed off to another family member? One thing to mention, and it's just really important as in just a basic education on donor advised funds, is people need to remember that the difference between this and, say, a regular savings account is once you give into a donor advised fund, you no longer can, in a sense, take that money away. You can give out of it, but you can't, if you decide you don't want to do this anymore, that money then belongs in that donor advised fund. So in your application, there's some language about kind of how that works and what happens to the fund if you choose to dissolve it. So just some things about those DAFs. So again, can't emphasize enough the benefits of them. 10 Talents, we've had the privilege of really helping people understand how generosity, taking it to a next level. We have families working on their donor advised funds. We have some businesses that have donor advised funds with 10 Talents. And it's just been really quite a joy. The other one other advantage that's not on the slide that I do want to mention is that the foundation, a good foundation, one of the things they'll do as a service is they will help you vet organizations for you. So maybe you hear about a nonprofit and you think, oh, I think I'd like to give to them, but I don't really know about them. Or you might say, I want to give to a cause, but there's so many different kinds of nonprofits that represent that. You can come to the foundation and they'll help you vet and think through and talk through some of your own priorities and help you identify a nonprofit or a ministry or a church in some cases that matches your heart and your giving desire. So that's the DAF. And again, it's a great tool. Once again, I want to emphasize and just remind folks that while a lot of organizations are going to be talking about, writing checks at the end of the year, you're going to have Giving Tuesday coming up, which is a pretty big deal. What we really want you to do is start listening for and talking with people about maybe people are in a place to make a little bit of a larger gift with a little more impact. So that's what that's about. So with that, we want to kind of shift into our next section of this webinar, which is about giving assets. So assets are a great way to also give to charity. A lot of people have the ability to give a little bit more than just cash. But nonprofits often don't know what these are, or they don't really know how to encourage their donors to do it. And really, in some cases, some of our financial partners and financial service industries often maybe don't remember, or they forget to encourage their clients to think about non-asset types of gifts. So basically, what we're talking about here is most of our giving capacity is in cash, but we really want to remind people that you can also give things like bonds, stock and mutual funds, charitable life insurance, retirement assets, art, collectibles, digital currency, also known as crypto, appreciated securities, real estate. These are just kind of some examples. Again, life insurance policies. And we also, at 10 Talents, we also have the ability to help people with a crop or an agricultural gift, a crop gift. So at this time, I'm going to go ahead and welcome Corey to join us. Corey's going to come back on video, and he's going to kind of walk us through this next section. Welcome. Hi, Corey.
Hey, good to see you here.
Did I miss any of the assets that you can give that you can think of, or do you...
No, just the importance of on the asset giving side, especially if you have stocks that have a lot of appreciation in them, you want to give them while they're still in that form. If you go ahead and cash them out and then give the cash after the fact, that can cause tax consequences. Versus if you give this appreciated stock to the nonprofit, they don't have an income tax level that they have to pay, so they'll take that appreciated stock and then they might turn it into cash. But then you don't have any tax consequences. So yeah, appreciated items are great to give, because then you don't end up burdening yourself with that tax liability.
Yeah, that's great. That's a great point. Thanks for reminding us of that. I do think stocks are a really great way to do that. So I'm just going to mention again for the nonprofits who are joining us today, if you are sending out year-end communication and you're trying to drive some donations, you might want to put a little paragraph at the end of your ask that, hey, if you are in a place to give a little bit more than some cash, like a stock, and you don't know how to do that, contact 10 Talents and we can work with you on that. Or you can work with a local foundation.
Yeah, I've seen churches be apprehensive about getting stocks. They're not sure what to do with them sometimes.
Right.
And yeah, don't be afraid of it. They're a great asset to receive.
Yeah, and they're really easy to do that transaction. So here's some benefits of donating assets. Again, you some of that larger lasting impact. The saving on capital gains, and then those the slide says tax credit, but really what we're talking about is that tax write-off. So at the end of the year, anything on that, Corey, that you want to mention?
That's great.
Yeah, so that really is kind of those benefits of donating those assets into a foundation or directly into your donor advised fund. So how you can donate an asset through a DAF? Do you deal with this much on your end as a CPA?
I don't have a whole lot of DEFs set up. I have a few of them, but yeah, I mean it's a great method to use.
Yeah. So if you already have a donor advised fund set up, so in other words, instead of just writing a check into it, maybe you have a stock, maybe there's a situation like a life insurance policy or something like that. And if you are at risk of maybe getting hit with a tax consequence or a capital gain situation, there lies the advantage. Let me give you a real quick example before Corey jumps into our last kind of section. We have this crop gifting program. I know we didn't put it on the slides, and we've spent a lot of time on this in other webinars, but I do want to mention that because we are based in the Central Valley and we are such a large agricultural region, the crop gift is a really interesting and fascinating way to encourage people in the farming community to think about this. And what they can do is they can actually donate a portion of their crop pre-harvest. So let's just say that we're going to just kind of pick on the raisin industry for a second. If you've got raisins, you can donate a portion of those raisins to the foundation. So what would happen in case of 10 Talents is you would donate, say, 50 tons of raisins. We would then hold those raisins on paper. We never actually take your raisins. And then when it comes time for harvest, those raisins are sold at the same location where all your other raisins are sold. And then those 50 tons of raisins that were donated are sold separately. And then a check is then cut from the distributor straight into your donor advice fund. Now, you as the donor or the farmer, what you get out of that is you now have money in your donor advice fund you can give away. But what you can then do is you can actually write off all the expenses for your entire crop, and you've now decreased your potential capital gains because you're basically taking less income through that donation. So that to me is just like a win-win-win. I mean, there's 3 wins there as far as I'm concerned. So that would be an example of how to really leverage a gift, a non-cash gift through a DAF. So with that, I'm going to turn it over to Corey, who's going to talk a little bit about our required minimum distributions and qualified distributions and how those work in some ways in which your donors and or you as a financial service representative can know about those.
Yeah, this is just a great tool. Once people reach that 70.5, they can start taking advantage of these qualified charitable distributions. And these are going to come into impact when people have these required minimum distributions. And a lot of times I'll have people, I can do those calculations, but I usually refer people to their financial advisor to figure out how much do they need to take out, because there's a calculation that's done over based on the value of your portfolio sitting in the IRA and your life expectancy. The IRS they don't want you to pass away and haven't paid your taxes. So they want to try to get you to take as much money and income in that you've stockpiled away into these IRAs before you pass, and everything gets a step up in basis. So that's kind of why the RMDs are there. But we have this cool tool that you can use with a qualified charitable distribution, abbreviated as the QCD. And you can give at 70.5. You can give up to 105,000, and that's for a married couple, it'd be double that amount. You can give up to that amount, and what you need to do is it's a direct payment from your IRA into a qualified charity. So it needs to be, so your church or whatever you typically donate to, instead of writing your monthly or annual check to them, you would just contact your financial advisor and tell them, hey, here's a list of people I want to give, donate to. Here's my normal donations. And by giving it that way, it comes off of your net income. It's an above the line deduction. So those that are not taking advantage, a lot of people have paid off their homes, and so they don't have an interest deduction for their itemized deductions. State taxes are limited to $10,000 for all your property taxes and everything else. So I just find that a lot of people are not taking advantage, and they're using the standard deduction limit instead of itemizing all the deductions. So that it comes into play there, and the fact that you can give 105,000 per person, and it comes off the top line, so you never have to pay taxes on it to begin with, which is really cool tool to use. I think some people consider, oh, well, it's a big hassle. It really is not a hassle. It's
Mm,
one phone call, one email. I mean, if things need to change, I've just found that most investment advisors it's not a hassle for them. They just put it into their system,
mm,
and it just saves an awful lot of money in taxes, as opposed to taking those deductions as a deduction after the fact, especially in that situation where you have stocks and that type of activity. Um, yeah, you don't, that would be a situation if you do have stocks, you don't want to cash them out
mm.
and then give, that would be a situation where it'd be better to go ahead and
Yeah,
potentially, if you have something that's a lot of appreciation built into it, a lot of capital gains, you might not want to use the QCD. So don't cash out stuff that has a lot of going to create a bunch of capital gains and then give it a QCD. But
mm,
things that don't have, so that's where you have to evaluate and talk to your investment advisor and see what assets you want to give through the
mm.
QCD. But it's just a great tool to
Yeah,
utilize. I think churches and nonprofits, um, it's really just an awareness. A lot of people aren't, they get to 70 or 73 when they have
right.
these RMDs, and they don't, it's not just something brought to their attention if they don't have a
Yeah.
CPA that they're
They
working
don't
with.
think about it. And I think often too, people that get to that point in life, and especially if they're, they're healthy and maybe things are going well for them, that's a time in life where sometimes they just don't need the income as much
Right.
because yeah, and so then they get a little maybe frustrated because they've got this income they don't need as much of, and now they're paying more taxes, and they come into probably your office, and I'm
Yep.
sure they've kind of grown a little bit, right?
Yeah. Yeah. Most people
Yeah,
aren't happy about getting the RMDs on top of all of it. They've put it
right.
away. A lot of times they've put it away with the intention to pass on to their kids or family members, and the government's making them take this money out, and then I got to pay taxes on top of it. And yeah, it's a lot of times a thing of frustration. So
Yeah,
to put it to good use, that's just, and not have to pay taxes on it. Usually it's a real positive thing once it's brought
yeah,
to people's light.
yeah. Yeah, we, often when we do these kinds of educational webinars, we like to look at pros and cons of everything. And honestly, in the many years I've been involved in fundraising, this is an area I have rarely seen or read something that said there's a downside, right?
Right.
I mean,
Right.
so yeah, so I think you're right. So anything on here? So again, those with retirement accounts, I think Corey already kind of mentioned that. Don't donate up to 105,000.
Yep.
But we do want to mention that QCD cannot be put into a donor advised fund.
That's important to consider. Correct.
Yes, yes. So while I did say that a lot of non-cash assets can go into DF, this is one that you cannot put into a donor advised fund, which is fine. And often it's the same situation. If you have a good relationship with a local foundation, you can call them to say, hey, I have an RMD, and well, I'm not going to put it in my donor advised fund. Can you maybe help me with a charity that needs the help? You might already have
That's
that.
where they work hand in hand with each other. I mean, if
Right.
you've got a donor advised fund and you have some stocks that have a bunch of appreciation, yeah, you might not use the QCD for that, but you put that into the donor advised fund, and yeah, so they both work hand in hand with each other really well.
Yeah, great, great. Is there any other recommendations, Corey, that you might be able to offer up as we think about the last couple months of the year?
Boy, from a year-end tax planning wise, for some of the small businesses, I think through um, those that have sole proprietorships, I usually like to talk to them about potentially becoming an S corp or an LLC, because there's a lot of
Mm,
extra tax deductions that you can take on
mm,
there. A lot of people are missing the qualified business income QBI deduction. If you have your own business and you're running a business, that's a 20% savings on the net income. So you want to take advantage of that QBI deduction.
mm, mm.
Um, certain industries don't qualify for it, but law firms, a lot of the service industries don't qualify for it. But you want to take advantage of QBI. The other thing is
Mm.
pass-through entity tax payments, PET payments. It's a way to pay your state taxes at the business level instead of paying your state taxes at the individual level. So if you have an S corp or a partnership that you're involved with and you're not paying your state taxes at the corporate, at the business level, you want to maybe ask your financial advisor about that, because that's missed opportunity.
Yeah. Yeah.
Lots of tax credits out there. There's
Mm.
still, work opportunity tax credits, disabled access credits. Yeah,
Yeah.
it's important to do the research, and it's amazing what you can find out there with the Google search and the Chat GPT.
Yeah.
It's important for people to, if you're not going to hunt it down, a lot of times people they don't necessarily just bring it to light without doing a little bit of research on your given industry.
Yeah. Yeah, that's great. And I would again say, if you're somebody that's listening to this webinar and you either know of people or you think, well, gosh, somebody I know, they do their own tax. They don't have a financial planner. They don't have a CPA. What I would say is again, contact 10 Talents or contact a CPA and just say, hey, I'm someone that would like to be a little bit more charitable and leverage my taxes. And I'm sure we can you can get those resources. So for the nonprofits out there, I do, while I think it's important to get those year-end appeals out there and those cash gifts, I really can't recommend and suggest or encourage enough about just adding language in those letters and those emails and those social media posts about, hey, if you have a different way to give, or you have stock, or you'd like to have a conversation about a little bit of a larger gift and you can save a bunch of taxes, give us a call, and then we can help you as person. And again, for our financial partners, really would love to see people be more generous through these things. So anything else come to mind, Corey?
No, I think that's it for right now.
Great. Here's our website, our phone. If you have any just general questions, you want to learn more about giving tools, you want to learn more about 10 Talents, we would love to have conversation with you. We can refer you to various other resources that you might need. Again, if you're a nonprofit and you never dealt with a stock gift, we can certainly be available to kind of give you some tools for that. I want to thank Corey. Corey, thank you for taking time out of your busy schedule to join us and add some perspective from a CPA standpoint. Our CPAs are super valuable in this space, and we appreciate Corey, and of course been a great partner for 10 Talents, and so thank you.
Yeah, happy to do so.
We just launched a new donor advised fund at 10 Talents for somebody, and he's actually in his early 20s. And so that's kind of a fun thing. Sometimes people think, so it's kind of a fun little story for us.
How long does it take to get one set up? I mean,
I would say probably we can have it set up within a couple days.
Okay.
So it's just it's an application. Yeah. It's a quick application. And then the donor will make that first deposit into their fund. And then if you do it through 10 Talents, what we'll do is we will, once we get the fund started, you name the fund, whatever you want. And then we actually create access to an online portal where you can go to and you can check the status of your fund at any time. And you can actually use that portal to do an online request. So you go on, you log on, and you say, hey, I'd like $5,000 from my DAF to go to Ashley's pet adoption clinic, and 10 Talents receives that, and we process it, and we'll send you a copy of the letter, and you're good to go. So
and what's cool is you get, like you said, you get the deduction when you
Yeah.
put the money into the fund.
Right.
And
Yeah.
so, that those funds might sit there. You can, and they're invested. They're not just
Right.
sitting there idle.
Yeah.
They're growing while they're sitting in those funds.
Right. Yeah. It's really a great tool, and amazing a lot of people don't take advantage of it.
Yeah.
So
All right. Well, I am not seeing questions in
okay.
Q&A, which I think just shows that Dan and Corey were so thorough And
That's what it must have been.
if you do have any questions, as was already stated, please don't hesitate to send us an email or go to our website and visit our contact page. Call that phone number above,
Mhm.
and we would be happy to connect you with the right people or programs or answers.
Yeah.
With that,
Yeah, and good luck with everybody with their year end. Again, thank you, Corey. Thank you, Ashley, and we'll see you on another webinar.
All right. Take
bye.
care.
Thanks, everybody.